The other one that's a bit more kind of non-consensus is yen. I got Bank of Japan this week, probably not a lot expected, but that inflationary pressure is bubbling away. Japan's growth is looking pretty good versus everyone. I just wonder when the Bank of Japan does start to change its mind.
When do you think that will happen?
Well, this is a tricky thing with yield curve control, right? It's the only kind of policy a central bank puts out there where they can't honestly guide you. Forward guidance is no good with YCC. You undermine forward guidance. So it is in the Bank of Japan's interest to surprise the market. So, there's a non-zero chance they tilt or they change YCC this week. Given UA has gone out of his way to sound a bit dovish recently, though, I'd say the expectations are low, but I think July is absolutely in play. Core inflation in Japan is not that different to the rest of the world. They've got weekly scanner price data of everyday items. Those items are up in price 9% in the past year. So Japan does have a bit of inflation there. The current account surplus is back. It disappeared last year. And meanwhile, here's dollar yen around 140. The officials last year, they intervened when dollar yen was 145, so still a bit higher than here. But on a trade-weighted basis, they intervened when the yen was exactly where it is today. So I think yen just looks far too cheap with all those upside risks.
So what are you thinking? Do you think they're just going to shift it down to around about the 2-year tenor and just let the 10-year go if you're talking about a shift on the YCC, or do you think it's going to be something even far more substantive and perhaps risk a little bit of the upside they got in CapEx and just abolish it altogether?
Look, I think they should get rid of it. I think you just get away from it. The Reserve Bank of Australia has shown its peers that YCC is tough to get away from and it can torch your reputation or at least damage it. So I think they should, but I think Bank of Japan probably wants to move in an orderly way. So I think it is shortening the duration, maybe firstly to the 5-year. Maybe they'll let the yield cap go up a little bit and commit to keep buying. But what happens after that? If they just, whatever they do to let the 10-year trade a little bit higher, look, it's not going to surge. We can see where Japan's swap rates are at the 10-year tenor right now. But the repatriation story gets interesting. So I think it's an FX trade, not a rates trade. Those 10-year yields perk up a little bit and Japan will just bring a stack of money home and be happy with the return JGBs gives them. So I think yen could do a bit more than people think. I think people are too tied to the idea that, well, the 10-year JGB won't rise that much. Yeah, but people will bring a lot of money home that's parked overseas.